Welcome to another video with Invictus Trader. My name is Robert Sutu. I'm going to try to do a quick weekly recap of the events that took place this past week. In addition, also kind of give my thoughts of what's to come in the next week. Next week is probably going to be a challenging week as we are nearing the election. And in addition to that, it's going to be the last week of the month. With that, anticipate some turbulence and anticipate some volatility going to the end of the month. With that said, I'm going to go ahead and do a top-down analysis, starting with the 6-month chart, working my way down to the 5-minute. Again, just please remember that trading is risky. Do not risk money that you cannot afford to lose. All this is not financial advice. I'm not a financial advisor. And please remember that past performance is not indicative of future results. With that said, let's go ahead and hit the 6-month chart, the volume profile, and kind of dig in there. As we take a look at the 6-month chart, the volume profile, we can see that right now, prices in balance. Prices near the point of control at 55.86, and right now we hit that particular area on Friday, and we ended up pulling back. Right now, the next area of interest is going to be the opposite end of balance at 57.87, and possibly the end of the volume profile all the way down to 57.24. I speculate as we near the 57.87 area, and we dip right into this big, large volume node, we're probably going to attract some buyers. Again, if 57.30, 57.24 breaks, then anticipate the next area of interest being 55.93, the volume point of control at that area. Right now, there is little excess at the top, so anticipate this being an incomplete distribution curve to attract buyers for the opposite end of the distribution curve. As we look at the monthly volume profile, we see a similar pattern. 58.86 was the volume point of control, 57.87 the opposite end of balance, and again 57.24. Real quick on a composite profile, we do have a large area of volume right here at the 57.50 area, low volume area in that area, and then going towards 5700 we have a big high volume node. All that again is indicative of possible strong resistance for the sellers, and buyers could definitely move in off those areas. Again, we have a very slow opposite end of balance. We want to establish a good distribution curve, but we have nothing at the excess at the high. So that could definitely be a magnet on price once sellers are able to take price to a certain area and then buyers move in. Again, a possible dip below 57.87 could trigger a big buying pressure targeting that all-time high area and kind of filling out that distribution curve. All right, guys, as we take a look at the monthly chart, we can see that we are forming a doji candle for the month of October so far. Doing so has given the price an opportunity to kind of pull away from the all-time high from July, that important price level of 57.80 area. And right now we're about 2.52% away from that area. Again, as we move into this zone and we form an all-time high over here at, I believe it's 59.20 area, we are pretty much have an average true range for this month of a 3.52%. So again, traditionally from what I've experienced, we look at 4.5% average true range for a monthly candle. Again, the July and August candles were kind of abnormal and have created a big disturbance in the price. But again, we have a doji candle right now. Area of interest is going into that July all-time high. We're going to find support at that area, or are we going to dip again below that area, targeting a lower price level? As we take a look at the weekly volume profile, we see that price is below volume point of control here at 58.50.25. Value area high, 58.85.75. Value area low, 58.33.75. Price did migrate above this area Friday, and unfortunately, because sellers took hold, buyers were not able to keep control of this particular price action. And then again, we dip below that particular area. Closing in my eyes below 58.50 was a bearish indication. We want to see price close above 58.85 for the bull stay in control, but closing below 58.50.25 indicates to me that next week, as we start out that week, we could possibly migrate lower into 58.01, the weekly low, and again possibly find support at 57.86.75 or even 57.61.25. Again, this is a very important area that I'm looking at right now. These particular areas of support are going to be more observant, and I'm going to point them out as we move to the candlestick charts. But again, Price not being able to close above 58.85.75 showed to me that sellers were still in solid control. It was just a seller trap. And let's see how well we perform next week. As we take a look at the weekly candlestick chart, we continue to see price making a new all-time high, but unfortunately buyers not able to get above there and hold. As we make a new all-time high, it just seems that buyers are not very motivated to hold the highs and continue higher. Obviously, we're losing breath, we're losing steam, and losing energy. Right now, as we take a look at this particular area, I want to shift your attention to the 5,800 area. We do have a small liquidity gap right there. That's going to be a big magnet on price moving forward into next week. And again, this particular area that we dipped under 57.62, we dipped under the area twice. And again, sellers were not able to hold the lows. Buyers did move in. 57.25 does have a relatively weak lows, and that is a lot of resting stops below this level. So it's going to be a key area for me to watch out. Are we going to dip aggressively and knock out that liquidity over there, and buyers able to move from there, or are we going to be able to find support around the 57.62 area or the 5,800 area? Something to definitely be observing for next week. As we take a look at the daily prices under the 5 EMA and 9 EMA as well, we are unable to hold price above that area. The EMAs are rolling over on each other, and right now price is finding support at the 21 EMA. If that particular area breaks, the next area of interest is going to be the 50 EMA at 57.51. So that's going to be a strong confluence area where I'm looking for buyers to aggressively move in. If that particular area fails on a daily, then we could definitely migrate back to 54.50 to 200 EMA. But that right now, in my eyes, is a very low probability setup. Highly more acceptable probability is this particular area, 57.51 to 50 EMA, where we find an aggressive amount of buyers. As we take a look at the Bollinger Bands, we can see that the Bollinger Bands are tightening up. This to me illustrates to me that we're migrating more in a consolidation area. We're going to be looking for liquidity as buyers are running out of energy. In order to do so, it's going to be more accepting for price to pull back a little lower, trap in more sellers, and use those sellers as fuel to push price back high. But again, right now, the monthly anchor VWAP right here around the 58.46 area has been hit 3 times. Let's see how many times the particular area could be hit. Another area of interest could be the previous monthly anchor VWAP around 56.50. But again, we'll see how far the sellers are willing to pull back and before buyers step in. As we take a look at the daily chart with this ascending channel that we have off the Q1 high and Q2 low, we can see that price right now is below the 50% area of this channel. Buyers aggressively try to keep that price above there, but unfortunately, we're just not able to hold that particular area. Right now, price closed with a very bearish candle below that 50% of the channel, and right now we are holding right at the monthly anchor VWAP. Again, next area of interest is going to be 57.78. Lines up just perfect with this top of this channel area right here. And again, 57.25 has a lot of resting stops below that area. If 57.25 breaks, next area of interest is going to be the anchor VWAP we have right here off, and I believe that's off the August low. That anchor VWAP right there could be the strongest area for support. Again, the September low anchor VWAP right now is around the same area between the 57.25, 57.78 area. So again, this particular area is going to be the most solid support area that I'm looking at. That right there is going to be where I'm going to possibly anticipate taking an entry trade if price holds in that zone and we get rejection and buyers move in aggressively. As we take a look at the 8-hour chart, I have the weekly volume profile overlaid in the background, and we can see a megaphone pattern that is developed off this particular area. We have a lot of strong support and resistance below and above us. As we can see above us, we had a lot of resistance for the buyers. Buyers were not able to just get a hold of that particular zone and break above it. Sellers moved off that area twice, and as we migrated below the previous week's balance area, we can see that we established a new weekly profile. Right now, value area high from before is around 59.1275, and this particular week's balance area is kind of moving a little lower and shifting lower. Right now, Friday's action was able to take price above value area high, and sellers hit that area pretty aggressively, taking price back below the point of control and touching the value area low. Right now, next week, I'll be looking to see, are we able to close and move higher, or as a Sunday open going to be below 58.33.75, indicating me a gap down to move lower. Again, sellers were able to take control Friday, did close price below POC and at the end of the lower end of the range. And again, moving forward, 58.01, very big price level that we want to observe, 57.75, 57.53, and the most important area right here, we have a lot of resting stops. If that area gets hit with strong momentum at 57.25 area, then the next area of interest is going to be the 56.97.75 volume profile VPOC and the opposite end of that megaphone pattern. But again, that's a long way away. Sellers are going to have to do a lot of work, and momentum is going to be key for them. The aggressiveness behind a sell-off or the momentum to attack these areas that have been strong resistance for them is going to be indicative of how they behave next week. End of the month, end of the week is going to be interesting, and let's see what volatility and shenanigans they can pull off. 4-hour chart with the monthly anchored VWAP with the standard deviation lines. Again, illustrate that we had an aggressive move early on in the week. Price was able to hit that third standard deviation line. Sellers took control. Again, buyers were not able to grasp and kind of push above that area, and we kind of been migrating sideways with sellers kind of dipping in. Friday was the last attempt to get above that particular zone. Sellers took control again and nearly closed right back off that monthly anchor VWAP. So far, we've had a dip below monthly anchor VWAP, a second retest, and again, this could possibly to be going to the next week, the third attempt, and possibly a break. Area of interest again is going to be the opposite end of that particular balance at the lower end of the second standard deviation line, 57.67, and if buyers do get aggressive again, the 57.20 area. But biggest area of interest for me is going to be this 57.60 area. That's going to be possibly the strongest area where we can anticipate buyers like we had on the beginning of the month. Let's take a look at the 1-hour chart. I'm going to spend a little bit of time on this particular chart, but I think it offers a lot of information. I've broken this into the weekly time frames, and essentially we start off from September 30th on to the previous time frame that we're experiencing right now. I believe this particular area kind of develops a story that we should definitely be attuned to. So with that said, I want to start at the previous week, last week in September, and as we can see right here, the previous all-time high that we have right here, I believe is at the 58.30 area. That had really no excess at the top. That particular zone had a lot of stops right above there. As we entered this particular zone, September 30th through October 4th, the non-FAR pay week, price just aggressively moved down on this particular news. Everybody was kind of bearish. They saw that non-farm payroll numbers sucked and pushed price into this 57.70 to 57.25 area range, developed a range, and we kind of sat in there for the rest of the week. The October low was made in a regular trading hour session around the 57.23 zone. We had an aggressive buyer tail wick form that area, and then subsequently after that, we had two more aggressive tail wicks form off that zone and failed to take out that October 2 low. The week ended up strong, and then we went into CPI week and PPI week. Again, price pulled back into this range. That particular Tuesday, as price was migrating lower, that October 8th low at 725 area was made in the overnight session. So that continues to be a magnet on price moving forward. So just kind of keep that in mind as time progresses, as price moves aggressively higher. I just made that annotation in my notes for the future, and that is a very key area that we want to reflect on. Again, the October CPI PPI week brought a lot of volatility and aggressively moved price outside of this range and starting this leg up. As price moved higher, let me figure out what I'm doing here. There we go. As price moved higher, we moved from the CPI PPI week, and we hit that 2 standard deviation line on the fibs. And as we can see, we ended up having a 2 standard deviation move. Price wasn't able to aggressively hit that area high, and then we kind of pulled back. While doing so, we found new buyers, and again, we made a new all-time high in the overnight session. So that particular zone right now failed to attract new buyers. We failed to hold the highs, and we kind of broke lower. So as we migrate into October week 4, we can see that last week price was just not able to gain traction. Sellers were in solid control. We continue to have lower highs, starting with that all-time high, and we just kept making lower highs as price moved lower. Again, right now, Friday's action took price aggressively higher, and then sellers just slapped the buyers away and able to push price lower. Right now, we do have a rising support line in this area, so let's see what happens next week. Big key area of interest again is going to be the previous all-time high made in September around the 5830 area. That area breaks, we're going to attack last week's lower at 5800 and then possibly dig back into this range. This range right here is going to be a key area of interest. We spent a little bit of time in that particular zone for about 2 weeks, and let's see what happens at 5760, 5750. If, and again, this is a big if, we break 5729, 5720 area, that could increase a bigger, stronger liquidation. We move in price a little lower. Again, there's going to be a low probability going into the elections last week of the month, but again, anything could happen. We are roughly about 2 weeks away from the election cycle coming up November 5th. We are reaching the end of October, end of the week, end of the month. A lot of volatility coming up. All right, guys. In closing, I want to shift back your attention back to the monthly candle, but on the NQ. I believe the NQ, again, is a canary in the coal mine as we migrate higher in the ES, migrate higher in the Dow. The NQ continues to fail to reach the July all-time high that it made at 21,219. That area right there has been a very strong magnet on price, but again, we're just not reaching it in NQ. Risk asset, risk money, smart money is not willing to contribute back funds into this particular area. The NQ has been trailing and aggressively been beating and outperforming everybody for the last 2 years. But again, it is just stalled out, and smart money obviously is not going back in there. With that said, we have that July all-time high at 21,219. We have that 17% pullback in the month of August at 17,588. Right now, the NQ is not able to get above the 3% line from the all-time high. 205.8654 continues to be a strong area of resistance. That's been an area that's been multiple times hit by sellers, and it continues to be an aggressive area. Again, I'm looking at this and the divergence that we have in NQ versus the ES or the Dow. If NQ is not able to get price above that area, touch the all-time high from July, and just continues to kind of fizzle away in this area, then we could experience a more aggressive pullback in the ES as well moving forward. Again, just be observant of this particular divergence and just kind of keep that in your back of your head. With that said, guys, I want to thank you for your time. Hopefully you enjoyed this video. Hopefully you found it educational. Again, next week is going to be a challenging and turbulent time frame. Generally, the end of the month tends to be more volatile than anything else, beginning and the end of the months. So just keep that in mind. Election is coming up. That could definitely add another level of volatility to the markets. But with that said, I hope you guys enjoyed this video. I hope you guys have a good night. If you don't mind, hit the like button, hit the subscribe button, and leave any positive or constructive criticism in the comment section below. Thank you so much for your time, and you guys have a good night.